Hello and welcome, Rahul. You're watching me on my YouTube channel, my talk show, and I always try to bring something important. And I'm guaranteeing you, if you'll subscribe to my channel, which I'm requesting you to subscribe to my channel, within 1 year you will see a strong metamorphosis in your life. The change that will happen, it will transform your ways of looking at things. Your discernment abilities will grow, your visibility, your vision will be deepened, and that is what I try to foster each and every day. So if you want to be beneficial, try to subscribe to my channel. And today I'm going to add value in your life, because I just try to foster something important. And today I'm talking about business, how to do entrepreneurship, and business is something that is very intrinsic in development of a country and development of individual as well. So if you will start a business, you can change your life altogether. In today's world, when you are scrolling up and down, on social medias, you would be witnessing that the only way to become wealthy, filthy wealthy, you have to be a businessman. You have to be someone who can sell products or can sell his services in different way. But very few people have basic knowledge. They don't have basic knowledge. And today I'm going to give you the entrepreneur idea. How to be a businessman, how to be someone who can do business. Altogether. Little by little, I'm going to make it clear. First of all, understand, if you are a person, you want to do the business, you are an individual. So an individual, when approaches bank to get loan, they will be given personal loan, they will be given car loan, they will be given home loan, in some cases mortgage loan as well. But for your business entity, business is a separate entity. Even if you are starting a proprietorship business, any business, the business will be a separate entity, but proprietor will be you will be taxed. If he's a simple enterprise, a simple business, proprietorship, you will be taxed personally, but the business profit will be in the name of business. Suppose your name is Rahul, suppose. So it might be whenever you will go to open a current account at business, even in your name, they will open Messrs Rahul Kumar. The business name will be given Messrs Rahul Kumar. That means it is a separate entity in your name. But you are the proprietor of that. Your identity will be different. They will create a customer profile. Your customer profile will be individual profile, and the business customer profile will be non-personal entities profile. So these are the two persons, separate person. They will attach you with the business, and government will tax you. The whatever profit you will make out of that very business, they will tax you personally. This is the characteristic of a proprietorship. Even in partnership, where there are two individuals, they have gone into an agreement of doing the business in a partnership. Suppose 60-40% of partnership. Even if it is a partnership firm, it is making profit in the name of firm, but when the profit will be distributed in shares, as per the partnership deed, government will come and tax you personally. You for 60% of profit, and personally another partner for 40% of profit. But if there is a loan in the name of partnership firm, you both will be 100% liable individually and separately. Whatever loan, suppose 1 lakh loan you have taken from bank and you go bankrupt, your partnership fails, they will come to both of you, and anyone will be liable for the whole amount, for the 1 lakh rupees. And that is what is the characteristic of proprietorship or partnership. These are the forms. But when you start a limited company where liability is limited, that is what is the difference between a firm and a limited company, private limited company. Suppose you want to go, at least their requirement of 2 persons will be there for starting a private limited company. 2 directors and 2 partners. At least one should be of Indian national. In India, all the business entities that I'm talking about the laws and regulations of India. So what will happen in limited liability company? You go, you register your company with the ROC. For that you have to, you have to go through the run, reserve your name of the company, you know and if it will be unique name, then only it will be registered in ROC. For that you have to create memorandum of association, memorandum of articles, which is called MO and MO, AOA and MOA. you know for that there should be two persons, two directors as well for a private limited company. For that very director, digital signature certificate is required, DSC. For that, DIN is required, director's identification number. you know and then along with your MOA and AOA, you will file for your unique name for your company with the Ministry of Corporate Affairs, on a Spice Plus platform. Directors will get digital signature certificate, directors will get director's identification number. Along with that, you have prepared your memorandum of association, memorandum of article, then you file to the registrar of companies. You get your name and you get authorized along with your authorized capital, which you have mentioned in your MOA, memorandum of association. It is actually defines the purpose of company, how it belongs to outside environment. So what is the purpose of company? If it is a, first of all, name of the company, it legally valid unique name. Thereafter, address of the company, registered address. Why? Because it will fall under the jurisdiction of ROC, registrar of the companies. ROC, where it will fall. So address should be valid, should be registered. Then again, your asset, your capital, actually your liability, that will should be defined in memorandum. Memorandum of association. That is what you have to know. So all these things are important to mention in memorandum of association. Two persons are associated. Okay. In article of association, internal, how the companies will function, how many directors, who will be the signatory, how they will command different delegations will be provided to them, how they will run the companies. This is what happened in article of association. But in memorandum of association, it defines the purpose of company. It defines that it has limited liability, and what percentage about the partners, directors, shareholders. So it has also a part that is called authorized capital. You will declare in your memorandum of association what will be your authorized capital. How much money you can raise from shareholders, from partners, directors, and shareholders. How much money you will raise. The cap, that is called authorized capital. And once it is authorized, with Ministry of Corporate Affairs, and with ROC, what will happen? You will be able to issue the share. Suppose your company's authorized capital is 10 lakh. Suppose, and you issue 2 lakhs rupees of share. Suppose 10 lakh, it has valuation, it has 1 lakh share. Suppose, because each and every individual share has 10 rupees of tag price. Then 1 lakh shares, 10 rupees, 10 lakh rupees. And you want to issue 2 lakhs rupees of share. Means 20,000 shares you want to sell, 10 rupees of each share. But only 10,000 shares has been subscribed by the subscribers and directors or shareholders. That means you get 1 lakh rupees of paid up capital. 10,000 shares into 10 rupees per share, it is called 1 lakh rupees. So actual paid up capital will be 1 lakh. Your authorized capital is 10 lakh, and you issued 2 lakh rupees of capital, yani 20,000 shares, and you still have 80,000 shares. 8,000 shares. 10 rupees per share. That means 80,000. So that is of 8 lakh and 2 lakh. That is what I told you. You just divide it, a little bit of mathematics is there. So this is called authorized capital, issued capital, and what? Yeah, paid up capital. This is the structure of a company. I was trying to make sense of the structure of a company, how you start your company. Now, did you understand? Now, if you want to convert into a public company, you need at least 3 directors, and 7 shareholders. For that, you have to go through a legal process, MGT 14 and INC. There are two legal forms. Along with that, you have to change your memorandum of association and article of association for meeting the requirements of public companies, and you will go from private to public. You will raise your paid up capital event, but it can be done separately through a resolution. But first of all, you have to bring board meeting where you have to pass resolution for going public. Thereafter extraordinary general meeting where each and every shareholder will come. They will pass a resolution for changing of the private companies into public companies, for changing name of the company. All that will happen. These are the legal process that will happen. But first of all, think of how you will start a smaller business. I'm going to explain that also. I'm not going to give you terminologies and only deep understanding of how the fund companies functions and how private and limited company, private and public company works. How individual tax in private companies, how it is taxed. It has limited liability of shareholders. If you have 20 shareholder director, suppose director owners has 40 shares, they will be limited to 40 shares. When the company, if you have taken a loan or government will come to tax you, they will not tax you personally. The company will be taxed on its profit. And if the company has taken loan, only the share that you hold is at risk. They will not come for your home, they will not come for your personal car, they will not come for your personal money. They will only come for the personal share that you hold in that very company, in the case of mining of that company. So this is called limited partnership. That is what you have to understand. Once you grow your business, suppose you have started a proprietorship and then you scale it up into an MSME, micro, small enterprises, medium enterprises. And suppose that MSME you want to convert in private limited company, you can convert that. Later on, suppose you want to totally convert into public company, you can convert that. This is what is the change. This is what happens in general case. That is what I'm telling you. Now you have understood all these things. Now the question comes: how will you start from little capital? Suppose you want to start little business. How will you raise money? For little business, either you invest your own capital in proprietorship form, or you will go approach a bank to lend you certain money. This is what will happen. For that, you have to take MSME registration. Micro enterprises, medium enterprises, small enterprises. You have to take MSME registration, which is called Udyam nowadays, Udyam registration number. And you have to take also your personal Aadhaar card and PAN number. PAN is needed. You know exactly what is PAN, permanent account number for tax purpose. Because you are individually taxed, that is why your personal PAN number will be needed. But in case of companies, or you need many things, TAN is also needed. If you want to deduct taxes on sources, if you are paying employees their salaries, if you are there for their rents, for your premises rents, all this need tax deduction as sources. For that, TAN is required. That is what you have to understand. And if for your business, your proprietorship business is doing good, is turnover. Turnover means all the credits and debits of the business, whatever booking, keeping you are doing, or in a bank transaction in an account. If your turnover is greater than 40 lakh rupees normally, you have to register your company, your proprietorship form also for GST, goods and services tax. For that, there is an identification number. You have to get that also, because every services and goods that you sell, government charge on that. This is called indirect tax, and tax deduction on sources is a direct tax, which is controlled by CBDT, Central Board of Direct Taxes. Though company is a third party, but whatever it pays to its employees, it deducts. It is responsible for deducting that tax, and it gives it to TAN. Through TAN, it remits, and for that calculation, TAN is required. So in some sense, they might say that the company is doing indirect taxing. They might say that, but it is direct tax on employees. And that is what is tax deducted on source, you know, and it is being collected, you know. So that is what you have to understand. Now I'm telling you, now I'm telling you, you approach a bank with your MSME Udyam and with your PAN and Aadhaar card. If your turnover is more than 40 lakh, then along with GST, you open your accounts and you approach bank for loan. For loan. Loans can be given to startups, can be given in terms of mudra, you know, mudra loans as well for existing business as well as for new businesses. Mudra is also applicable. They will give you money, but banks are mania, you know. They want security of the money, and for that CGTMSE coverage is there. Don't get afraid. You won't have to provide collateral security all the time. Collateral means your property or any kind of liquid security in terms of FDs or KPs or NSCs, whatever you want to secure your loan. You know, for little money you won't have to provide collateral. They have the facilities. All the banks have the facilities. Most of them are tie up with CGTMC, Credit Guarantee Trust Fund. You know, that is what they indemnifies them. They pay them when it goes NPA. Almost 75% of loans. In some cases, up to 10 lakhs, 85%. In women cases, women entrepreneurs, up to 90%. If that was amount of loan is secured and can be given to bank, why not the institution will lend you? They will certainly lend you. In UP, you will see that Mukhyamantri Yojana, MSN, CM Yuva Yojana, they are providing assistance to individuals and in terms of leveraging their business capacity, providing them MSME loans, you know, CM Yuva loans. So it is very good. You don't have to provide ITR in the name. You don't have to provide even GST, and they will get up to 5 lakh rupees of loan. So this is also a good scheme. That is what I'm telling you. Even if you go through PMAJP, all you need to submit your project report. Project report only. Employment generation program where you are going to start a startup. They will provide you both term loan for your equipment and your machineries, whatever equipment you want to buy, you know, plant and machinery, what you want to set up, and along with that they will give you working capital for doing your day-to-day business requirements, for stocks, you know. This is the business cycle. You need machineries and you need stocks to do businesses. For both, they are providing certain money to you. Little bit of money you have to bring as margin, 50,000 rupees for 10 lakh rupees of project. Is this more? 50,000 rupees? No. Even if you don't have 50,000 rupees, go for Mudra Yojana, Sisu Mudra Yojana, where they will provide you 50,000 rupees. Mere project report, little bit of project report. You will pay 200 rupees, they will give you. The CA will provide you project report, 2 years, 3 years of balance sheet, projection of balance sheet, and then you file there. They won't ask you, you know, even 1 year of ITI is enough, but they won't ask you. But for Tarun and, you know, Kishore, you will have to provide at least some ITI of 1 year. They will insist for 3 years, maybe in certain cases. But initially you have ways, you know. For CMUR, it is no requirement of ITR for up to 5 lakh. Only declaration that you are an unemployed, you know, graduate or unemployed person. They will provide you loan, even if you have done matriculation. For starting up your business, you start from there. And now I'm telling you one of the most miraculous thing. You will see that for making 1 lakh rupees of profit, you will at least do 7 to 8 lakh rupees of turnover. And if you want to earn 1 lakh is nothing, at least you need 3 lakh to 4 lakh to sustain your life yearly. So if you want to make 3 to 4 lakh rupees, automatically your turnover in your bank account would be more than 18 to 20 lakhs rupees, more than 20 lakh. And for earning up to 8 to 10 lakh, your turnover will surpass 40 to 50 lakh rupees. That is what is my guarantee, because business run on little margin. That is what you have to understand. Business run on little margin. When you dive into business arena, you will see that for making a mere little margin, a little profit, there is a mad scramble, and you will have to go through that scramble initially to make that money. And that is what you have to understand. The government is not understanding. They are thinking that the turnover is much more in the account and they are taxing unbearably. And that is why entrepreneurs are opposing, especially in Karnataka. What happened? They have abandoned UPI payments. They're not doing that, but they're getting ITR, income tax letters, love letters. They're providing them for depositing tax. But you will see that in practical business applications, turnovers, you'll have to assess it with a different lens. But our finance minister is thinking that options and futures are not for uh, middle class. What they say? Have you seen any top class people trading in options and futures? You will not ever see. Only middle class will be there. But they have a different thinking. They think that your turnover is more, you're earning much more, but the profit margin is really very little. We have seen that. We had a product where we were giving loans, for 1 crore of turnover, we were giving up to 25 lakhs rupees. Later on, we witnessed that those 25 lakhs failed. They are not being able to make profit, they are not being recovered. Because 1 lakh crore turnover is not much more, what you think. They are only making 7 to 8 lakh rupees, where the consumption of family is more than 8 lakh rupees. And that is what they are making the profit. How can they pay 25 lakh rupees of loan? So that's why the product failed, and they bring more and more checkpoints, which is good. But you have to see the different angle. This is what is the supposition is wrong for them. Now I'm telling you, once your turnover goes above, your mentality will change. You will try to see with a different way how businesses functions. You will have intuitive idea. You will have comprehensive knowledge how to run a business. You will understand balance sheet. You will understand ITR, how to file registration of income tax. ITR returns. You'll have all knowledge of that. Then you start scaling it up. Big MSMEs, up to 10 crore, even it is micro. 10 crore turnover, it is micro. MSME, it is a micro enterprise. That is what they know. After that, medium and small, above 10 crore. But you have to understand, they have classified well, but the taxing lens of theirs is very small. Their mindset is small. That's why they are taxing more. And that is what I'm telling you. Leave the government. Try to focus on your business. You will be able to do miracles in your life. Once you will convert that MSC enterprise into a private limited company, and thereafter, once your turnover will grow, your profit you will be making. If your balance sheet is growing stronger, I will try to discuss balance sheet deeply. But time is getting longer, video is getting longer. Otherwise, I could make you everything clear today. Even I will discuss about capital markets, what are money markets and what are primary and secondary market of capital market. What is all together the financial market and its tools, what are instruments. Instruments are really a tool to provide ownership. That is what you have to understand. What is treasury bill? What is bonds? What is debentures? What are stocks? I will discuss it differently. But if you want to leverage the loan from bank for your MSME, these are the very good. There are many ways. If you want to leverage more loans, up to 10 crore CGTMSE guarantee is there. Up to 10 crore for financial institutions, especially private bank and public bank and foreign banks. For 2 crore for a small finance bank and regional rural banks, 2 crore up to 2 crore CGTMSE guarantee is there. So they can give you proper loans based on CGTMSE guarantee. Beyond that, most of the schemes are designed to secure banks. They need collateral. They need your property. Even if you go for home loan, personal loan, they need property. For that, banks have their own legal lawyers. For that, they do legal scrutinies, LSR report. They give legal scrutiny report. They have their impaneled engineers as well. They will assess your property, their marketability, their market value, their realizable value. What will be that? Based on that, they will provide you loans. Collateral should be verified. Very good. Should be inspected, and that is what the bank do. Even if any property will go for collateral, and you want to raise money, there are certain types of loans where you provide property as a collateral. Even it could be given as a primary security, loan against property, where the property will be primary security. Whatever property will bring up to the government, to the banks, they will ask their lawyers to go and give them non-encumbrance certificate. Is there any encumbrance on, if the title deed is really, title is really valid or not? That is they will check him. That is what they will check. SARFAESI compliance is there or not for any selling in future. The loan goes on NPA. Is there will be any problem in selling that property? For that, SARFAESI compliance is there. What is they will comply. So all this legal scrutiny report is provided by the empaneled lawyer for the property, and valuer will come. They will decide value of your land and building, the market value and the realizable value, the feasible value they will provide to bank, and along with that property value and its legal scrutiny report, they will decide that they should give loan to you or not. And thereafter, mortgageable agreement will happen, and you have to bring certain stamp duty also you will have to provide. And some cases registered mortgage will happen, in some cases equitable mortgage will happen, where you have to deposit your title deeds to the bank. Initially the lawyers and engineers will certify the bank exactly where the loan is feasible or not. So in this way loan is assessed, for your working cap. Actually these are the for securing loans, for your working capital requirement or your for term loan requirement. We also do balance sheet analysis, and I will talk deeply about balance sheet. Balance sheet analysis is very important. Though in some cases they will give you money based on your turnover, 1/5 of your turnover, 20% of your turnover, or they will ascertain what is working capital gap, current asset and current liability of the firm. What is they will see, 75% of that they will sanction. Both will be analyzed, and they will compare which is better for you, and then they will provide you that way money for working capital. For term loan, they will assess exactly DSCR, where the loan is being coveraged, or not, interest ratios, everything they will compare, current ratios for working capital as well as for term loans. So they will look up, and try to ascertain all your balance sheet. I'm going to tell you about balance sheet in deeply. What are the source of funds? What are the uses of funds? Source of the funds means liabilities, from where you bring your money. Uses of the funds is use, where you create asset with the use of the liabilities, and liabilities, what is that? Total net worth, capital of the shareholders, total net worth, of the company's capital, retained profit, that will be, and reserves, total capital, total net worth. Thereafter, term loans will be there, loans from banks for term loans from relatives, maybe, or loans from other persons, an outsider. There will be creditors, they will be giving loan, which is short-term loans as well, the short-term liabilities. And asset side, if you will go, you will see that fixed asset is there, intangible asset is there, non-current asset is there, current asset is there. Fixed asset, plant and machineries, vehicles, equipments, lands and buildings. These are the fixed assets. Current assets, cash, book balance, and debtors, stocks. These are the current assets. Intangible asset, the brand value. These are all things I will discuss about it deeply in later part. So all these business terminologies are related, and once you will dive in banking and finance, you'll understand exactly how to scale up your business and how to bring it from little enterprises to public enterprises, where there will be more than 3 directors and 7 shareholders, and you will be running a public enterprises profitably, because if you understand how to manage your balance sheets and how to keep intact your company, and if you bring system into the company, your company will never fail. All you need to understand all these terminologies that I'm going to talk about. These are the technical terms that you have to understand if you want to run a business. Later on I will discuss, the video is getting prolonged, no one will see up to that. Thank you for listening to me.